Alright guys, good afternoon. It is Friday, February 3rd, 2017, 3:36 p.m. New York time, and just wanted to make a quick video here on the non-farm payroll that came out today. So, here we are in Forex Factory. We've got the non-farm payroll numbers consist of these three main categories. Okay, these are the red level pieces. Okay, and so going into this news today, if you checked all your news feeds, you would find that pretty much across the board they were expecting positive numbers because of A, the strength of the dollar overall, B, just recent sentiment and economic releases that came out, and C in particular Wednesday, back to Wednesday here. On Wednesday we had the ADP non-farm payroll change. So this is the private the private sector one that comes, well, not private sector jobs, but this is put out by ADP, not by the US government. And a lot of times this mirrors what the non-farm payroll one comes out on Friday, but not always. So this was a way over expectation by 80,000 jobs on Wednesday, and so of course people are thinking, all right, well, that's going to be good things for Friday. So we come to today, and the actual front headline non-farm payroll did come out better than expected. Not as high as the ADP one, but they were expecting 170. We got 227. So it certainly was higher. That's why it's green. So that's a good thing. But, and I have found that the more important number that the market seems to concentrate on, and I've learned this from a couple of analysts that I follow, is that the main one really, this is the headline one that comes out. People see this, and there's always usually an initial reaction to this number. But it's one thing to create jobs, but it's another thing for what's the buying power of the people that are working. Are they making more? Are they making less? Are their wages growing? Are their wages shrinking? If they're growing, they're able to spend more, buy more. That spurs the economy theoretically. It also could possibly lead to an inflationary thing, which means the Federal Reserve may have to hike, give them more reason to want to hike interest rates, which is bullish for the currency. All that. But if it comes out negative, it's the opposite of all that. It suggests, yes, there may be more jobs, but people aren't earning as much, so in the end, they're not going to go out and spend and buy things and stimulate the economy just because they're working. And so on that front, this came out, they were expecting 0.3, which was a little bit less. They were expecting, it was 0.4 the month prior. It was 0.3. It came out at 0.1. So this doesn't seem like a big difference, but this really is a big difference. Essentially, flat earnings. Negative obviously, but so only up 0.1%. So this was a big miss. So even though this was good, and the unemployment rate actually ticked up 0.1%. This whole 4.8%, this is kind of a voodoo economics from the government, because the unemployment rate is actually quite a bit higher than this, but I'm not going to get into that, but this is the one they publish. But that came out as a miss too at 4.8%, so that was up slightly. So it was overall was, I guess you could say a mixed bag, but more of a miss. And so the market reacted accordingly. So we'll go to the charts here and just look at a couple of these things. So this is the euro dollar. This is the 30-minute chart. Positive news for the dollar is going to be negative for the euro dollar. You can see when the news came out, we had this initial spike down right here. So when that top line number came out, that 220,000 whatever it was came out, the dollar initially rallied. And so the euro dollar immediately spiked down, okay? But you can see what happened within, and I was watching it, within less than a minute, it immediately reversed and started going up. Now, I had a buy stop right here, and honestly, from an Elliott Wave standpoint, I should have gotten in before the news came out. I really, this is my own trading psychology I have to master, because when I look at this pattern, I see a market that is going to go the other way, because this move right here is basically as an ABC. Okay, this whole thing down, which completed with this spike down. So if we zoom up a little bit, we'll see this move up, and this whole thing was basically a correction down. I didn't check the pips on this, but let's say the initial move down was like 70 pips, and then we go up, and then this is a little correction, and then 65 pips. So I mean, these are pretty close to being an ABC, and I saw that really as an ABC correction. And so I wasn't confident the number was going to come out, all those numbers were going to come out good. So I put a buy stop here on the euro dollar, and of course I did get filled, and you see where we are right now. We did spike up. Obviously I missed all of this. I mean, really, again, kind of makes me a little angry, because I knew it was going to go up, I mean, by the pattern. And I knew the sentiment was kind of overblown. I was reading all the headlines this morning from all the analysts and the big banks and brokerages, and everybody was predicting that the report would be all positive, varying amounts of job creation, but overall positive. And given some of the questionable sentiment from the dollar this week and everything else, I wasn't convinced. And then I looked at the pattern this morning, and I said, that doesn't look like a market that's ready to reverse and go the other way. And so I put the buy stop in up here, which you can see I lost all these pips. If I had put it in right before the news came out, I would have gotten filled right here, because I would have already been in, and I would have had all of this in between. But that just goes to show you about once you trust your instincts, and that psychology is a big part of trading. So here we are right now, and of course we made this initial move up, we pulled back, and now we're kind of moving up again. Now obviously it's late in the day on a Friday, there's really nothing going on now. The market's going to be pretty much dead the rest of the day. And so I would expect I'm going to hold these trades into the weekend, because I have a feeling once the things crank up again on Monday that we'll see the euro continue to move up. I have a stop loss way down here. I'm going to leave it there. This might be a correction. We might see this further correct down, in some kind of ABC here. For maybe this is a wave 2 we're setting up for. From a Fibonacci standpoint, that correction is sitting around the 38.2. We could easily see that come down to this 61. So that's why I'm going to leave it. I might expect a little bit of drawdown as we head into next week, but I'm going to leave it. So just going over, so that's the euro dollar. So now going over to the dollar index. I do not have that on this platform. Let me go over to my MT5, because I don't have the dollar index on MT4. So here's your dollar index, and again on the hourly chart it's just the reverse. Here's where the news came out. We had this positive spike up on the positive front line number, and then it immediately reversed, and we've been pretty much heading down since then. I didn't trade this because I don't trade this particular, I just use this as reference. I did trade the US Swiss short, which is the opposite of the euro dollar, and it looks almost identical to this. So it went down. We went up, almost tagged this upper trend line. You can see again on the higher time frames we've been moving inside of this trend line, or this channel here, this falling wedge, and looks like we've still respected it. We went up, almost pretty much tagged it, and now we've headed back down. And again, this looks more like a corrective move, and we've gone down and we've retraced, and we've gone coming down again here late in the day, which again, this isn't going to really do anything today. I would expect again we may see the market reopen on Monday, and this might just move straight down, or we might see a further retracement, back up, maybe back up to around this high somewhere up here. So I wouldn't be surprised, but I do think it will continue down and at least get back to this the bottom of this trend, this channel, and then it gets down here again, and we'll see what it does. But even if it just makes it down there again, that's another 80 pips to the downside. So I certainly would take that. And the U.S. Swiss, I guess I'll just look at it on this chart. I am short the U.S. Swiss on the other platform I was just showing you, but let's see here. Where's my U.S. Swiss? Here it is. So as you can see, it looks pretty much just like the dollar index. Probably need to redraw this trend line a little bit because it's to capture these highs here. So probably something like that. So yeah, same thing. Here was the initial announcement. It spiked. It poked through here. Took out probably some buy stops, and literally within seconds to a minute, it immediately reversed and went back down. And it's pretty much looks just like the dollar index, in the fact that it's it's down, it's correcting, and it may correct further. I wouldn't be surprised if we see a correction back to the trend line and then a fall off. So I am short this pair as well. I have a stop up here. I'm going to hold that through the weekend. If it does reverse on me, I'm just going to hold it because I think ultimately it will turn back down. And again, this looks more correct. This whole thing here is more corrective. Looks very similar to the ABC we saw on the euro dollar, just flipped over. This is not a trend. This whatever this is not a trend. So, all right. So yeah. So that's what I mean, guys. Again, I took the trade on the way the technical pattern looked for Elliott Wave, and it turns out that looks to be accurate. But again, from the fundamentals and more importantly the sentiment part of it, again we had expectations being that everything would be positive. The analysts out there saying it's going to be a great report because of the ADP numbers and all the other underpinnings for the dollar, and it's going to be great. And when it disappoints and you get 2 out of 3 of the measures are negative, the market really is like, whoa, gets caught by surprise. And of course the market's made up of people, and so the psychology is to sell and kind of throw in their longs on the dollar based on that, and that's what happened. And so this initial spike up was probably caused by that frontline news with the positive job number, the employment change, because that's the first one to come out, and everybody's like, yay, let's go, positive. And then, no, not so much. And then the other part of it is it's the large banks. It's your large banks and your funds and everything that they realize that too. So what they do is they drive the price up. They need some liquidity to tap into before they sell it. Well, they can't just sell it from here because they'd get a bad fill because they deal in such massive lots that if they just click sell, they'd get a really bad fill, and they'd have a hard time making profit. So they run the price up on the initial good news. They take out all these buy stops. People that have buy stops sitting up here, take them all out, tap into all that liquidity to sell to, and then bam, then they take the price down. So they buy it up. They figure out if it's worth it, and then they spend money to buy it up. And then they get up here, they know there's a bunch of buy stops up here, and then they sell it to all these people, and they just load up and they slam it down, and that's what happened. So it's a combination of the retail sentiment, negative sentiment that struck when the Elliott numbers came out, and also it's it's probably your large banks and investors that are really the ones that can actually move the market with their orders, and they tap into some liquidity and then slam it down. And that's what they did. Some combination of that, I'm sure. So yeah, that's the way it is. I do think that this will continue down. We'll probably see some short covering here heading into the weekend. Things are really obviously pretty much draining out at this time of day on a Friday. So But anyways, guys, maybe we'll take a look at this again next week once things get going again, and we'll see where it's at and manage the trade and get ready for some other stuff. On a side note, I will be traveling next week, Tuesday to Friday, so I'm probably not going to be active in the market except maybe in the evening if there's any news out of Asia, Kiwi, Aussie, Yen, anything like that. But I'm probably not going to really have access much during the day, so I don't expect that I'm going to be trading much off the the pound or the dollar or any of the non-Asian currencies for most of next week. So, but I'll try to be on and answer questions and make a couple of videos if the news warrants and if I have time. But anyway, so I hope you guys have a good weekend, and we'll hopefully talk to everybody soon. Leave your comments and questions, and share the video or what have you, and that's it. All right, guys, talk to you soon. Have a great weekend.